Hey there, welcome to CoinDesk TV. Welcome to The Hash. It's the best show on CoinDesk TV. In my humble opinion, I'm Zach Seward. We're joined by Jen Sanasi, Will Foxley. They both agree. Best show.
Those are
Good
some
stuff.
fighting words, Zach.
What are you
I
talking
know. I
about?
was like,
What are you talking
it's like
about?
is that a compliment or a diss for me?
It's a
since
compliment.
all of them.
We're this, all of us together. We bring so
Wow.
much. You know, Jen, you have multiple shows. I'm not throwing shade at the other show, but this show,
Sorry,
this
Lawrence.
this is what it's really all
I
about.
I have to agree. I'm just gonna put that out there. Yeah.
There you go. Love that. All right.
Pretty good.
Enough hemming and hawing. My bad, folks. Let's get to the stories of the day. Will, lead us off. What's up?
Okay, let's go to FTX land and talk about bigger problems. This is a tough one. Creditors and debtors are fighting it out after a draft reorganization plan was filed by John J. Ray III, the new CEO of FTX and the FTX estate. Of course, they're going through this Chapter 11 process, which is going to be drawn out for quite some time. They've been at it for well over 6 months at this point, and they've been racking up a lot of fees. The creditors here are not super happy with the handling of a lot of different aspects of the estate. For one point, they even issued that, hey, why is the Treasury not being put into UST bills so we can earn a yield on top of all the money that is waiting to be distributed to FTX creditors? The estate has some thoughts about that. There's some back and forth here. At the end of the day, I think it's just two groups arguing over a vast sum of money that is owed from one party to another. This is a story as old as time itself, right? Like Chapter 11 back and forth. Jen, I got to throw it to you. What's your take on this one?
I'm imagining when I read the story, I imagined FTX's new management, like in suits, all the lawyers that are making all that money that we spoke about way back when, trying to talk to like a bunch of degens who won't turn their Zoom cameras on and just getting absolutely frustrated. There are some real great nuggets in here if you read the footnotes and the whole thing. But I think it makes sense. Like FTX's management needs to be conservative. They need to look at this whole thing holistically. I think this is one group. It's the group of unsecured creditors who are saying, no, you need to do X, Y, and Z. I think they were suggesting putting some of the money into long-term crypto holdings. They're talking about US Treasury bonds. And, I think that's a little bit risky when you're looking at getting as much money as possible back to all of the people who are owed money in this. There's a lot to dive into here, but Zach, I want to get you in first before we dive down that rabbit hole.
Yeah, I do like the part where it's just like, we're going to put it all on red and we are going to win it back in one
Buy
spin,
low,
baby.
sell high. That's the strategy.
Let's do this thing. Yeah. It's like that meme. It's like that. I don't know. I forget which movie it is, but the Las Vegas meme where everyone's like gathered around the craps table, like various disfigured injuries. And you often see various sort of crypto figureheads placed into that meme. And you can imagine the degens on the creditor side being like, yes, we can do it this way. But really, it's just a tug of war between two parties seeking to establish power over these proceedings. Right? I think this is very much in response. This is kind of John J. Ray kind of clapping back and saying, hey, creditors, like, pipe down. I know you said this thing where you want control over who's making these decisions. I think that was the previous week that the creditors committee came out and cast a little shade on how the estate is handling things. And hey, JJ Ray III is going to clap back. If we know anything, this man does not mess around. We've seen this guy come out firing time and time again. He's ready to roll up his sleeves and put them fisticuffs up on this one. So interesting to see, again, the war of words escalating between these parties who, see different priorities and how this should be handled. And this is some tension sort of spilling out into the public sphere. Will, what do you think?
Three bits and pieces here. Maybe it's context, maybe it's just kind of like fun facts that I just want to bring up. One, there's this debate over should FTX reboot, FTX 2.0, as it were. John J. Ray III and the FTX estate has hinted at it and maybe even like suggested that they might move forward with it. There's certainly a lot of creditors and debtors who want this to occur because they think this is possibly the only way for them to see more of their money. Typically in Chapter 11, we see maybe 11 cents on the dollar get paid out eventually. I mean, Mt. Gox, Celsius. There's so many different stories in the past where we haven't really seen the money go back completely. Another few thoughts on this is, one, the debtors have issued in this note a complaint that they have not met with the estate at all. And it seems to be some frustration there because the FTX estate is spending so much, like millions of dollars, like the hourly cost for these things is incredible, yet they're unwilling to meet with the debtors in this situation, which strikes me as a little bit odd, but maybe they just don't want to deal with it. And I suppose if I was in their situation making a lot of money, I wouldn't answer the phone either. I don't know. Jen?
I have to add this tidbit in. They are, I guess, looking for solutions. If we want to get the uncredited, the unsecured creditors some points here. The reason that they were suggesting that FTX look into short-term treasuries was to help offset that $330 million legal fee bill that we spoke about on the show. I think it was months ago now. So they are coming with solutions. You got to give them some credit there. Zach, I'm going to hand it off to you for last words.
This story will never die. This is the story that will never die. Maybe we can talk about it 10 years from now if we're lucky. Oh, yep. Wow.
It's kind of like all the other FTX stories too, right? Where there's like got new information about Ellison or Sam or whatever. It's like two different tracks for the same story.
Yeah, you got to have the, you know, like you got the A storyline and the B storyline. You got the suits sparring over various procedural updates, and then you got the juice over here. You got the Machiavellian. You got the personal drama. You got all sorts of stuff. All sorts of stuff.
Maybe when Netflix finally makes the documentary, they'll use a clip from the hash. That is my dream.
We have been in a book about this.
We have been in a book about this. Yes. Shout out to Brady Dale, now of Axios. Go get that book. All right. That's it. We're going to change gears. We are going to go to an update on the Ripple case. Now, last month, there was a big judgment from a federal judge saying that certain sales of XRP satisfied securities transactions. Others did not. And now the SEC is appealing or is asking for permission to appeal that judgment in a major case that has been closely watched in the crypto world. When this judgment was first issued by federal judge Annalisa Torres, it was seen as a partial victory for Ripple and a partial victory for the industry writ large. So clearly the SEC is advancing its case that maybe those programmatic sales also qualify as securities transactions, and they're asking for a certain type of appeal on the matter. Jen, I'm going to throw it to you. Everyone was super duper bullish about this decision from Judge Torres, and now they may have to take it back to appeal. How does that sort of change our understanding of what happened here?
This is another story that just will keep going on, I think, until the end of time. It feels like we've been following the Ripple case. It did feel like there was like a moment where this entire industry took a breath and thought, wow, this is a small win for us. It's a small win. It gives us a little bit of clarity, a little bit of direction. We, of course, have seen since then, Coinbase has referenced this partial win in some of their filings against the SEC. And now I just feel down in the dumps again. Of course, there's still a trial pending here. And now we have the SEC filing this appeal, which I think everyone expected. The SEC said that they were going to file the appeal. The part that I'm going to watch and that I think is kind of interesting is Judge Torres said Ripple did not break the law when the XRP token was sold on public exchanges because purchasers had no reasonable expectation of profit based on Ripple's efforts. I just wonder if we're going to see Ripple's efforts come to light here compared to the price of the XRP token. Ripple has made a lot of announcements about acquisitions, new projects, new products, and if that is going to be some swaying information in this case, because I think that it's not a far cry to draw a parallel between Ripple's new project and the price of the XRP token, even though Ripple has definitely distanced themselves from that narrative. Will, what do you think?
Yeah, classic Ripple. It's not our token. We just found it out there. I don't know. It was in the wild somehow.
Okay, so go back to and one is a cryptocurrency. I have been told many times on Twitter.
It's true. Mm-hmm. You'll be told time and time again on Twitter. I don't know how they relate, but somehow. So going back to like the lawsuit here in the case between the SEC and Ripple Labs, the programmatic selling part that Zach brought up. This is the thing that like confused a lot of people, and there's definitely a lot of lawyer opinions on this, including some op-eds that are written on CoinDesk. So definitely go check those out for an expert's opinion. From a layman's opinion, just looking at this, it seemed a little odd that you could have this broken up into two different tranches, right? Where we could sell to VCs, we could sell to banks, we could sell to institutions, and that's not okay. But if we sell it onto an exchange where there's just retail clients and they're not really having an investment contract, they're just purchasing, I guess, like a commodity in this case or something like that, then it's okay. And it just didn't make sense to a lot of people when they first saw this. I only saw a few lawyers who were looking at that and be like, oh yeah, that checks out. I think it also, if it stands, sort of cuts the heart of how a lot of crypto lab companies or foundations do their sales of assets when they create them, or quote unquote assets. Oftentimes we see private rounds where initially there's like a pre-mine created and then they divvy up that pre-mine to investors, to insiders, to the foundation, to the early team. And then they do a huge sale to the retail, either through like an airdrop or listing on an exchange elsewhere later on. So let's take a WorldCoin, for example. They did this, right, where they gave some to early investors, they gave some to the team, and then they gave a ton to market makers to be able to keep like the price of the token pretty steady. And under like this ruling from this judge, a lot of that would be broken, right? Like, would you be able to give a token to market makers to even loan it out so you could have a price? I don't know if you can do that anymore under this. It seems like you could only really sell it to retail. And that seems odd to me. It seems like it's going to change. And I don't think it's a surprise to anyone to see the SEC go against this or at least try to challenge it. The outcomes from it could have huge repercussions for how everyone is looking at the token market. Zach?
Yeah, my understanding is that a lot of these sales sort of date back before established best practices were set up, right, for a lot of these token distributions, right? So this is from an era in which a lot of the sort of more regulatory kosher practices were being embraced. So I think a lot of the space has evolved, and I think there is a question as to whether or not this will impact sort of the current understanding of how tokens get distributed to early investors. I think the SEC had to appeal this one because, Will, as you mentioned, it really undercuts Gary Gensler's argument that almost everything except for Bitcoin basically is a digital asset security. Now, I mean, I think my understanding of the ruling was that it's not really the securities it's not really the assets themselves, it's which type of transactions they're involved in. And that was sort of the fine line that Judge Torres was trying to distinguish here, right? Similarly to how in the Howey test, it stemmed over an orange grove in Florida, right? The oranges themselves aren't necessarily securities, but if they are involved in a securities transaction, then they meet certain requirements in terms of disclosure and other things that need to happen, right? So the understanding, at least on the industry side, was, hey, the assets are just like the oranges. They aren't inherently securities. But if they're in a securities transaction, then certain rules will apply. And that's what Judge Torres was trying to articulate. Whereas Gary Gensler has been trying to say, these things are securities. They look like a security. They walk like a security. They quack like a duck. I don't know what I'm saying anymore. But he was saying that that is always the case with these things, that they are, by nature of their existence, are securities. Whereas the judge is saying, no, we need to look at the specifics of the transactions in which they're involved. So a lot of people, I think, within the industry specifically, saw that as a pretty reasonable explanation of how it can be both at the same time, a security and not a security. And now I think the SEC is at least taking another shot at advancing their case here, such that other claims relating to other assets can be supported. But yeah, I mean, this is, I think a lot of lawyers, this was definitely the thing where a lot of lawyers on crypto Twitter were sort of placing their bets in terms of what would happen. Some were more cautious that an appeal would occur. Others were indicating that there would likely not be an appeal here. Now we see with this particular type of appeal that the SEC is going to have this one looked at again under video review, but who knows? All right. Oh, I talked way too long. Sorry, guys.
It was great, Zach.
We loved it.
So
we loved it.
We're going to take a break so that I can just rest up for our next segment. We're going to talk about the future of social media with the cool new app that is launched after much development. We're talking about Galaxy, and we will be interviewing the founders of that app shortly after this break. Stick with us. It's the Hash.
Hello, and welcome back to The Hash. There's a new social marketplace on the block, and it's called Galaxy. The platform hopes to empower content creators to build personal economies and interact directly with their fans. Joining us now to discuss is Galaxy CEO and co-founder Solo Ceesay and co-founder and NBA star Spencer Dinwiddie. Good afternoon to you both, or good morning. I don't know where everyone is. Good morning, good afternoon, good evening.
Morning.
Good morning.
All right, let's talk about the launch of this. It's been in beta for a while. It's now officially launched. On yesterday's show, we spoke about Grimes coming out in the media and saying she actually made more money from her NFTs than her music career. Talk to us about the experience that creators can have on the app.
Yeah, absolutely. Spence, you want to take that?
Oh, I was going to give it to you, but no,
I should have actually just called on one of you, so it's my fault. I'm sorry.
Yeah. No, you could have made it easy on us as a moderator, but it's all good.
I've already failed.
Nah, never that. It's too early to fail. They're just getting started. No, so I mean, as we look at monetization of the individual holistically, I think you're going to get some of those familiar features that you see from like in OnlyFans, et cetera. You know, people being able to message, video chat, and then Galaxy is very unique in the fact that they can create individual experiences. Like I have like a jump shot tutorial, things of that nature. But yeah, it's all about monetization of oneself. Also, you can post your NFTs, et cetera. We have a Web3 wallet in there running on Hashgraph, obviously, or Hedera, sorry. But yeah, I mean, it's about monetization.
So I'm going to toss this one to you. This has been a long time coming for you guys, right? This project, I think you've been working on it for 3 years. Talk to me about what it means to get this fully launched today, and what you learned over that process of cobbling this thing together over those 3 years.
Yeah, absolutely. I mean, it's been a crazy journey over the last couple of years. I mean, I think it's been actually almost closer to 4 at this point since Spencer came to me with the crazy idea of wanting to tokenize his contract. I'm sure you guys remember that, but it's a crazy journey. It's a super exciting time for us as a company. It's been a quite difficult bear market for a lot of people, and so it's we count our blessings every day, being able to have the opportunity to do what we do and wake up every day and service the creator economy. And for us, we really do feel like this was an opportunity that we took upon a journey, rather, that we took alongside with a lot of our other creators as well. And they're a part of this as well. And so we're hoping to really be that next iteration of what the crypto ecosystem can really look like and manifest in the way in which in larger audiences. Galaxy is meant to be a highly consumer facing product. You're going to notice that it's not going to feel and look like the crypto products that we've used in the past. And so for us, we think that today is a step in that right direction, opening up the next chapter about what crypto products could really look like, and really pushing paradigms and allowing these things to not only be usable, but be useful. And so for us, we've definitely got our battle scars across the way doing this, but we are super excited to have finally made it to this finish line, or I guess the beginning.
Very cool. Congratulations. Spencer, I'm throwing this one to you. I mean, Solo mentioned your attempts to tokenize your contract in the NBA, which was sort of really a landmark step, I thought. So you've been an early adopter on crypto outside of just this app itself, right? So I really want to get your perspectives on what that next chapter of, the intersection of Web3 and sports, right? We saw a lot of excitement around this in the last cycle. Curious for your thoughts on what's going to shape and drive that narrative going forward.
I mean, I think if you're looking at the sports landscape right now, you're seeing kind of like Sol said, a paradigm shift, right? We see what Messi just had with the TV rights. We're trying to boost fan engagement in any way possible. We look at VR. I think that cryptocurrency, blockchain technology in general is going to play a big role in that. As we look at experiences, I think, a marketplace for athletes is going to show up at some point in time, as long as the leagues kind of say it's kosher. I think in terms of contract tokenization, I was a little bit ahead of my time just because obviously people were fearful of it at the time. I mean, I ended up getting it cleared by the league, but overall it was a difficult journey with that. But it spawned, obviously, Galaxy in general in terms of being or creating more utility, making it more palatable for the everyday user, for every person on the planet, really. But yeah, in sports, we're gonna see everything be a chip on the table. We're gonna see every shot be able to be bet on, monetized, etc. I mean, it's the only way to continue to enhance fan engagement and to push the envelope further, right? Because as long as fans want to consume whatever piece of our leagues, of our sports, etc., that are out there, the more money they can make. And you see, as the cap is booming. I mean, you're seeing $100 million contracts in the NBA every day now. It's nothing special anymore, right? 5 years ago, 100 million meant you were a max player, and now it means you're a solid starter. So that envelope is going to continue to be pushed, and the fans are at the crux of that.
Spencer, a follow up here for you. I clicked on Amazon Prime yesterday, and Destination NBA popped up. Started watching that, and you popped up there for a second. So I was just thinking about, like, in your interaction with these like new G League players or anyone who's coming to the league. I mean, they're like 17, 18 years old. These are like Web3 natives in a way, right? Where they might have NFTs, they might be interested in crypto. When you're interacting with these players who are now coming to the league and getting these big paychecks, but also have maybe like purchased Bitcoin, are you seeing like any discussions there that you're not seeing with some of the veterans in the league before, that perhaps they missed that boat already?
Yeah, I mean, I won't say missed the boat necessarily, because obviously I think one of the cool things about the NBA is you have, even in the age gap that we do have, let's say 35, 18 to 35 roughly, a lot of the older guys are still looking to invest, make money, etc. So, they're going to be a little bit more well-versed on cryptocurrency than maybe the average elder statesman in society. And again, it's kind of a misnomer, because 35 isn't necessarily old. I'm 30 years old. But yeah, I think with people that are more familiar with NFTs, Web3, it's just a more seamless conversation. It's like anything else, life. If you have a little bit of a knowledge base, it's easier to talk to you about it. And then just looking at the evolution over the last, let's call it 6 years, right, since about 2017, I'm not crazy anymore. I mean, it's not a no. I mean, that's real. Like in the locker room, I'm not crazy. I mean, maybe kind of on a tree branch to a degree, maybe a little bit off of the normal path, but I'm no longer like the insane crypto guy. So that's always fun.
Spence, I got to ask, you're with the Brooklyn Nets now, you're with the Mavericks previously. Any collaborations with Mark Cuban, or did you guys nerd out over crypto ever?
Yeah, we had a couple conversations, honestly, and I still keep in contact with him to this day. Obviously, he's the owner, so it's not a situation where necessarily we're trading in investment tips or anything, but we did have a couple of crypto conversations, and obviously he's a brilliant human being, and it was a pleasure for me to get to play on his team for the year that I did.
So I want to get you on the board here real quick. I always think there's an interesting sort of base layer conversation, right? All these apps are built on these, blockchain foundations. Hashgraph, I guess, is not all the way a blockchain. So I will add that one little note. It's a little bit different sort of mechanically. So I wanted to ask you specifically why you chose to build there as opposed to on other platforms. What can Hedera do for you that, say Polygon can't in this instance?
Yeah, I mean, to be honest with you, I gotta give my respects to Spencer. He taught me a lot of what I know about crypto, at least to start. He had introduced it to me. So choosing Hedera was actually something that had been introduced to me by Spencer, introduced to us. But if you think about the value proposition, Hedera really seemed to be the most practical technology for us to build Galaxy. And if you really look at anything that we've put out in terms of Galaxy promotional materials, it's not meant to be overly degen facing. It's not meant to be overly technical. It's meant to really, obstruct away the complexities with blockchain and crypto and really surface those benefits to the end user. And so for us, using Hedera's technology made that really easy out of the box. Because when you think about crypto technology at the moment, or blockchains in general, layer ones right now, a lot of them might have varying issues. You kind of have to, in a world of having to make trade-offs, Hedera allowed us to make none, which was super exciting. It was practically decentralized through the use of the governing council. You have reputable companies and brands behind the chain. They have great corporate partnerships going on, so that we're excited about the future. opportunities to partner with those council members, in addition to the fact that it's asynchronous, Byzantine fault tolerant, super high throughput and scalable. Essentially out of the box, this is a very Web 2 experience or playground for us to be able to build an application that behaves more like what people are used to versus, having to, sign in with MetaMask, fund your account with gas, fund your account for gas with ETH, etc. Because the fees are so low and equitable within the ecosystem on Hedera, we can very easily, cover those fees, and we do on Galaxy, at least for this time being, which makes it really seamless and easy for somebody to come in there, and really enjoy the platform for what it's meant to be.
Gotcha. Well, thank you guys so much for both joining us. Those are Galaxy co-founders Silo Cisse and Spencer Dinwiddie. Congrats on the launch, guys, and thanks for chatting.
Thanks for having us.
And that's it for the show today. Thanks for tuning in to The Hash. I'm Zach Seward. We got Jen Sanasi and Will Foxley. We'll talk to you soon. Bye.
Bye.